Amgen is next. This one is a major biotech company out of the west coast of America. You've heard me talk about it here before. It's got blockbuster products like Neupogen, which is used for red blood cell regeneration, Enbrel and Repatha. Repatha is one of those new PCSK9 drugs for drug-resistant cholesterol. If you're not winning with the Lipitor and the statins, then you can take these new things and they cost, you can't believe what they cost. This is a biotech company, so they're not just making pills, they're using live cultures in order to create drugs. It's one of those biotech companies. It's the market leader in the United States of America. Market capitalization, $108.73 billion. Price to earnings ratio 15.94, dividend yield of 2.77. Let's get the share chart up. You can see it's been becalmed at about $150 a share for about a year and a half. But it's one of the ones we like. We've got quite a lot of clients who own them. Joseph, what did you turn up on looking closer at Amgen?
Well, it has basically almost reached a plateau, if you can look at it. I mean, 80% of their revenue is from the US and the rest, which is 20 from the rest of the world, possibly many in Europe. Also had been struggling a little bit. You know, they've almost reached a plateau over the last 12 months also, so down about 20% for the year. But, you know, in terms of the long term, obviously, you know, it has done very, very well. The PE slightly higher, more demanding than Novartis. Half the, you know, in terms of the market capitalization, I would not possibly try and pounce on this one and basically not hot.
Okay, let's go through some of the stuff they do. So we know that the Neulasta, Neupogen and Aranesp stuff, that's, you know, like the things that they take on the Tour de France, but they're not allowed to. That's to kind of promote and stimulate red blood cell creation after operation or after chemo. But for just about everyone else, it's a fabulous thing to take because that's exactly what you need right then. The Enbrel, which I flashed past there, is in fact to treat rheumatoid arthritis. Again, something that has been particularly troublesome and affects people that are older that didn't die, like we were saying earlier, when they were younger. And then Kyprolis, which is a drug they have for cancer, myeloma, bone marrow, leukemia, that kind of stuff. So this is a research-based company. They've developed most of the stuff internally, spend a lot of their revenues on new drug R&D, but they have been known to do acquisitions. So they buy biotech companies that have got interesting things going on. Anyway, our sense is this is an attractive one. Yes, its share price has been a bit flat, but on the other hand, a price-to-earnings ratio in the high teens isn't particularly high in America. So really all they need is one or two strong performances, for example, like from Repatha, which is the cholesterol drug, to fire them higher. So I'm going to go with hot on this one. You're concerned, maybe not quite as attractive. Okay, good. So we're going to go with one hot, one not hot.